Hello to all investors and welcome back. In today's video we'll do a quick summary of Charlie Munger, The Complete Investor by Trent Griffin. Please remember to buy the book and support the author for the full complete content if you like what you see. Our quick summary might do injustice to the authors and their complete value. This is why we always recommend our viewers to buy the book. Thank you. Now let us dive in. Before investing in any stock, consider 4 things. 1. Always treat stock as a portion of a company and you are a part owner for buying that portion. 2. We should buy the company at a significant price below the intrinsic value. Please check out our other video if you do not already know the meaning of intrinsic value. 3. Make the market your servant and not the other way around. This part requires a lot of brain power not to panic when the market panic. Doing your research and diligence before investing in the stock really helps. 4. Make a rational decision. Listening to people on YouTube or Facebook for stock tips is not that rational if you just buy it without thinking and doing research about the tips. Always keep things simple, and if you don't understand the business, move on to the next stock. No one is forcing you to buy it. Did you know there are over 3,000 listed companies in the United States? So when you do find one that you like and understand, and if that business can generate incomes for a long period of time, at least 10 years and more, you can sit your damn ass on it. Sorry for my colorful language, but we can't do a complete summary with Mr. Munger without colorful languages. You can expect more of those in this video, and only in this video. Oxymoron is next. So please viewers, be advised. Patient is one of the key drivers in profiting from the market because the market is designed to transfer wealth from the active trader to the patient investors. Sometimes the best thing to do is nothing. So don't be an oxymoron and do everything every day. Understanding the power of compound interest is very important. However, getting that power is not an easy task. Therefore, when we find a company that we understand and love what it does, it is not only wise, but prudent to leave our capital in there and let it compound. As the late Einstein once mentioned, compound math is the most powerful math in the universe. So when we do find it, why leave it, unless we find another company with better opportunity cost in doing so? So the lesson here is don't try to invest every day in everything, unless it is an index fund. Once you find a company that makes sense to you following the value investors' fundamentals, sit on it and let compound math work its magic for you. Figure out your temperament and see if you are well suited to even be an investor is a very wise decision. If you are a wretched excess like I am that think the stock market is a lottery ticket, it is best for you to be an index investor. It is very important for us to understand that risk only comes to those that do not know what they are doing. If you are going to invest in a stock yourself, here is a tip from this book. There are 2 types of businesses. You can extract 12% out of the business every year. Or, you must put everything back to the business and add more in to keep it afloat. The best business is the business where you can extract 12% a year out from it. And as for growth companies, it is only good if it produces more dollars in the future. Growth companies can do great harm to investors if it doesn't produce anything in the future. We have seen great examples of growth companies that fail and just consume cash in the dot-com bubble. Most of the company involved in the dot-com crash is not producing anything except for .com on their website. It ended up very well for the startup that managed to get .com in their name, but destroyed and wipe out many investors in the process. So only invest in growth companies that you truly believe there is a real product behind it and is what the consumer wants.
Please, if you can do us a quick favor and click like and subscribe, it will be amazing. This will really help us with the YouTube algorithm. Thank you so much for your like and subscription in advance.
Understanding the moat that protects the business you want to invest in is extremely important. Please check our video Mary Buffett's Part 2 for understanding the moat if you are not sure what is a moat. As Mr. Munger said, how do you compete against a true fanatic? You can only try to build the best possible moat and continuously attempt to widen it. In another word, if a company have no moat, there is no competitive advantage for that company to survive and thrive. Any other company with large capitals will come in and swallow it. According to the author Mr. Griffin, we should have at least 2 years of viable data on any particular company we would like to invest in. It takes a lot of work and discipline to be a good investor. You must understand the financial and business languages of investing. For example, what is ROI? What is ROC? What is ROE? And why are those important? Even a blind squirrel once in a while finds a nut. Consistently place the right bet, take patient time and discipline. We hope this video somewhat help you, and before we let you go, please, if you do well or when you do well in life, seek ways to pay it forward to others that are less fortunate than you. This message is brought to you by payingforward.net. Direct giving is what they believe in. Let us sum up the valuable lessons in this video. 1. Find a good stock and sit your ass on it. Allow compound math to do its job. 2. We have to keep things simple, and if it is complicated, move on to the next one. And the index fund is good for investors that don't have the temperament and the time to do researches. If you want to know more about index fund, please check out our video on why does the price of stock goes up and down. 3. Understand if the company has a moat, and if it does, what moat is it? Finally, you have to understand the language of business. Thank you so much for your time, and once again we hope everyone does well in the market. All the best, and you are amazing, and we hope to see you in the next video.